So you have stuck to your targets, no change in the targets. You're announcing a buyback, increase in the dividend. So it seems to be lots of positivity when it comes to your numbers. How positive is the outlook then for the second half of the year?
Look, our strategy is working very well. And as you said, strong first half, 7% top line growth. We've seen that as broad-based growth across data and analytics, capital markets, post-trade, so each of our divisions. And we are delivering on all of our targets. So revenue growth, cost synergies, revenue synergies, operating margin. And the other thing about this business is that we do generate a lot of cash. So we have reduced our leverage. We've paid for a couple excellent acquisitions. And as you mentioned, we've announced a £750 million share buyback. So our strategy is working very well. I'm very pleased with the performance.
David, you're pleased with the performance. It's a strong half. I understand why you're pleased. It's good earnings. But London seems to be struggling to attract listings. What's your view on that?
London is the world's most international capital market and a great place for listings. So I think as we have been in a little bit more challenging times for listings all over the world, I think there's a little more realism out there in terms of where there are quality opportunities. London is a very attractive place to list. I think we've seen some of the narrative around how easy a ride it is for all companies in the US. That narrative has shifted a little bit as you've seen some very weak performance in the US. So London continues to be the most attractive listing venue, certainly most active in Europe, and a very attractive place to list.
On the subject of listing, how important is it that the LSE is able to attract listings such as ARM? David, I know that those conversations are ongoing, and I don't know what you can say about them, but what would it say if the LSE failed to attract a listing such as ARM?
Look, I think London is a fantastic place, would be a great place for ARM to list, be a great place for many other companies to list. Not in a position to speculate on where any particular decision is going to end up. But as I said, London, the strongest listing destination, certainly in Europe, and the most international capital market in the world. So we think it'd be a great place for London, for ARM to list.
David, I understand obviously you think it's a great place for ARM to list, but are you saying you don't think it's a problem if ARM decides that London is not right for it?
We have many listings here. We have a very robust capital market, as I said, the most international capital market. And we look forward to attracting many companies here for years to come. We've been doing it for 300 years. We'll be doing it for a lot more.
Okay, moving on to another story that's sort of rumbling in the background, David, of where your business operates, and that is the UK economy. The Bank of England now forecasting a recession in the UK that falls just short of 2 years. Running a business like the LSE Group, I know you're global, but you're very linked to the UK as well. Does it feel to you like we are heading to a recession?
Clearly, lots of challenges in the market, lots of uncertainty, whether that's geopolitical, whether that's inflation, rising rates, et cetera. I think from our perspective, LSEG is very well positioned for an environment like this. We're very diversified across geographies, across products, across customers. We have 73% recurring revenues. Our products are critical to our customers. It's hard for our customers to conduct their daily business without our services, without our products. And then specifically in an environment like this, there are a number of parts of our business that actually tend to benefit from the uncertainty, from the volatility. So for example, the interest rate uncertainty that we see in this kind of environment tends to drive higher trading volumes on TradeWeb, tends to drive higher clearing volumes on SwapClear. So parts of our business really tend to benefit from an environment like this. And as I mentioned earlier, we generate a lot of cash, low leverage, strong balance sheet. So we're very well positioned for an environment like this.
Okay, so David, that's the growth side, but obviously the other part is everyone's talking about inflation at the moment. What are you seeing on the cost side, and how is that affecting your business?
So our costs are largely people and technology, and we're good at managing both in terms of the costs. We have maintained our guidance for low single-digit cost growth this year, and look forward to continuing to manage our costs. Of course, we, like everyone else, see the inflationary environment, and we're working hard to manage that and managing that successfully.
Are you preparing parts of your business, though, David, for tougher times ahead? I hear what you said about, yes, the parts of the business that will benefit, but when you look ahead at a UK economy that faces the challenges as set out by the Bank of England, you as chief executive, does that set about a thought process as to how resilient the business is going to be and any changes you need to make?
So we're always very focused on both cost management and resilience in terms of whatever challenges the environment may throw our way. And while there is a lot of focus right now on inflation and some of the risks in the environment, I should just point out that for many of our key customers, many of our key clients, it's been a really tough environment for a number of years. So if you think about the zero interest rate environment, that's been really tough for many of our bank customers, especially the European bank customers. So it's not as if we're all of a sudden going into a tough environment. For many of our customers, it's been a very, very tough environment for a number of years. We've been managing that with them over the past several years. And we look forward to continuing to partner with our customers to get them through a challenging period. As I said, our business model is very well positioned for a time like this.
David, sorry, just to kind of follow on a slight tangent on that is, EU keeps on touting this cliff edge. How are your customers talking about that? In terms of clearing, I should say, sorry. The 2025 cliff edge, apologies. Yeah, sorry, apologies. So, not a clear question.
No problem at all. Look, LCH has been recognized a number of times now as systemically important to our member institutions, to our customers in the EU. We look forward to continuing to work with the European Commission and other stakeholders in the EU to continue providing access to our member banks in the EU. It's been provided a number of times. I am hopeful and optimistic that we will continue to be able to serve our customers through June 25 and well beyond.
So you're hopeful that the extension goes beyond June 2025. The European Commission seems to be considering all kinds of ways to tempt clients away, though, David. When you look at what they are proposing, is there anything that threatens London, do you think?
I think that we'll continue to see efforts to make the EU more competitive from a clearing perspective, and we think that's good. We think that would be a positive for the EU to have a more competitive clearing environment. We have a clearinghouse in Paris, and we would love to see the EU have a more competitive clearing environment. By the same token, LCH Limited here in London is systemically important, has very high market share in critical assets, and it's very important for EU institutions to be able to continue to access that. So we look forward to working with the authorities in the EU to make sure that they are able to continue to access that.